Hey everyone, I'm your New York daddy and stock commentator Little T. Today we're cutting straight to the chase. Why now? On November 2nd, 2025, with Tesla stock TSLA closing at $456 from Friday's October 31st surge. Is the perfect time to add to your position amid this rally? The answer lies in Morgan Stanley analyst Adam Jonas's bombshell report from last week. After hands-on testing FSD advancements and eyeing the XAI tie-up, he boldly declares autonomous driving is solved, maintaining his overweight rating and hiking the price target to $800, with projections for 8 million active vehicles by year-end and $1.2 billion in FSD revenue alone. This isn't hype. It's backed by tech, user experience, business momentum, and a limitless future. Picture this: a car that doesn't just drive, but earns money. A stock that doesn't just rise, but reshapes a trillion-dollar industry. If you're on the fence about buying Tesla, this video gives you 5 rock-solid reasons why FSD Progress is TSLA's iPhone moment. Buy in and watch the flywheel spin. First reason to buy: tech supremacy. FSD V14 upgrades the moat, directly inflating valuation. Jonas's call is data-driven. The holy grail metric of intervention rate has dropped to 0.05 per thousand miles, below the human driver's 0.5 average. V14.1.4 evolves from V13's mostly autonomous to zero safety driver, powered by end-to-end neural nets. 8 cameras build a 3D world model with decision speeds 10 times faster than humans. Example: on a highway merge, V14 predicts trajectories 0.3 seconds ahead and swerves decisively. This life-saving precision cuts accident risk by 70% per internal tests. Why buy the stock? This tech doesn't just sell cars, it unlocks Robotaxi subscription revenue. Jonas projects FSD adding $15 per share by 2026, lifting TSLA's PE from 60 times to 80 times. Ignoring this is like missing Netflix's shift from DVDs to streaming. Second reason, real-world experience proves product maturity, set to explode consumer adoption and drive sales. Stock surges. Veteran testers like Whole Mars blog call him Mars, and JP rave about V14 as a humanized pro-driver. Mars's 20-minute route test. Tesla zero interventions, beating Waymo by 4 minutes and dodging their map blackouts that veered into parking lots. Passenger reactions: this car drove itself up the hill, I'm buying a Model Y. In Chicago, JP's Mad Max mode weaves through downtown chaos, slashing 20% commute time, then switches to chill for school zones like a gentleman. Tough scenarios: V14 nails rail crossings, construction zones, and cop-directed traffic at 98% accuracy, fixing V13's headaches. These aren't outliers. Early NPS scores hit 85, forecasting FSD subscriptions jumping from 20% to 50%. Investment angle: Tesla's 5M Plus vehicle base at 10K annual FSD fees unlocks 50 by potential revenue, turning cost centers into profit machines, evolving TSLA from EV maker to AI titan, with stock at least doubling. Of course, V14 has minor kinks like occasional Mad Max overspeeding or parking angle tweaks, but Elon Musk promises V14.3 will polish smoothness. These are growing pains, not deal breakers. Think early iPhone glitches, now a 3T behemoth. Buying Tesla means betting on this iteration velocity. Third reason, business rollout accelerating, Robotaxi primed to erupt with fresh cash flows. Post V14 maturity, Tesla's service areas are exploding. Austin adds airport routes, Bay Area doubles coverage, totaling more than Waymo's entire US footprint across 5 cities. Earnings show end of quarter Austin deploys safety driver-free cybercabs, kicking off L4 commercialization year 1. The killer convergence logic, company Robotaxis on roads, and private Model 3Y unlocking identical FSD, owners become drivers, idle cars turn Uber, earn while you sleep. Jonas forecasts 5B Robotaxi revenue in 2025 at 70% margins versus 25% for vehicles. Why now? TSLA's 1.1T market cap undervalues the Robotaxi moat in a 5T market, like Amazon's Ecom to AWS pivot, stock from $100 to 3K, miss the regulatory greenlight chase, and you're paying 30% more. Fourth reason, competition reshaping in Tesla's favor, scale effects crushing rivals for low risk, high reward. Waymo's LiDAR crew is map-trapped, expansion costing $10 per mile, covering just 0.1% of US roads. Tesla's Pure Vision, globally scalable, software updates activating 10M vehicles at near zero marginal cost, winner take all. Jonas highlights, rivals are heavy asset traps, Waymo burning billions on unclonable maps. Tesla's light AI flywheel with data plus dojo supercomputing laps them by 2 years. Investment view, TSLA beta 1.5, volatile but rewarding, but FSD moat weathers cycles, EV sales dip, Robotaxi fills the gap. History 2024, FSD update spiked stock 25%, expect V14 momentum carrying into Q1 2026. Fifth and final reason, boundless future, transcending autos into a trillion-dollar ecosystem, positioning TSLA as AI nexus. Humanoid Optimus leverages FSD paradigms for factory logistics, drone delivery, ag drones follow, physical AI's first killer app, 10T market scale. Tesla's flywheel, daily billion-mile data feeds models, adding reasoning layers for abstract scenes. This isn't just an auto stock, it's tech. Jonas eyes 3T TSLA by 2030, 30% CAGR. Compare Nvidia's GPU to AI 10x run. Tesla's EV to Robotaxi mirrors it. In summary, FSD V14 is your ironclad reason to buy Tesla. Tech unlocks, experience conquers, business erupts, competition crushes, future unbounded. At 348, just 23% to 430 target, low risk entry. Holders, congrats. Newbies, open an account, snag 100 shares to start small. Drop your position thoughts or worries, regs, jobs, in comments. We'll unpack next step, like, subscribe, bell on. Don't miss Tesla's liftoff. Thanks for watching. See you next time.
Please subscribe and follow New York Daddy Investment.